All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Wednesday, March 6th. So, a lot to go over today because the market did sell off today. We spent some time talking about that yesterday, really seeing a little bit of the cracks form in terms of the uptrend that we've been in the last couple months, kind of stalling out and turning down yesterday. And a lot of that was in the small caps. There really wasn't much to go on, other than a couple toppy looking candles here. But so where are we now? Before I move to small caps, because I think that's important to go over, that's really where I go to first when we kind of see a move start to change. They typically lead, and that's something that I've relied on for a while in my trading career, watching the small caps kind of turn ahead of everything else. They're a little bit of a leading indicator. So S&P, we really didn't pick up too much. Besides the VIX closing a little bit higher, the VIX was up actually 6.8%, up to, where did we close? Around 1574. So that is, if we look at kind of just the 1 hour chart and just looking at some closer support levels, we did not take. So first of all, we're below value. That's a chart that we sent out pre-market. So that was kind of a little bit of a short-term warning signal. Notice we have not completely taken out those lows from, I guess this is what, earlier in the week, was it? If we do that, and if we cannot hold this level, then I would say, if we want an S&P futures level, 2750 or 2752. SPY, if you don't use S&P futures for technicals, basically 275. So that's another $2 down where we would find that support. Again, the virgin point of controls, they don't really become active where you don't have to worry about them until you get outside of value, which we are now. We're now under value. Next, so I mentioned I want to talk a lot about the small caps, right? So there's a couple different things here to go over. And first things first, let's look at the daily. Clear looks much different than S&P, right? You got a clear break at that 200-day moving average. Whoops, Thinkorswim has a little bit of an issue here. That's fine. We can go over to I also wanted to talk about this relationship, IWM over SPY. We went over this chart at the end of day yesterday too, talking about how it was starting to turn. Well, it's definitely turned down. So there is some support down here, but you could see it's really picked up some speed. So what's the level to watch on the daily chart? And we went over this also in the midday. Sorry, I don't mean to keep repeating myself, but we've done a lot of analysis on this. 151 would be the level to watch on the daily chart. For short-term trading, if you go to the 1 hour, this was the level that, just like we were looking at this in the S&P, notice we've taken this thing out, right? That's a virgin point of control. We don't have another one till down here, so we could go further down to 151 before we bounce. But I put on a really tiny trade here at the end of the day because look at the RSI on here. It's pretty oversold. So maybe we see a little bit of a bounce in the morning. And who knows? We could end up going down further. But look at the RSI. It is a 16 relative strength index. But when these indices get to be around 20, I tend to think that there might be a reversal coming. And it could just be a reversal to burn off that oversold level. But you could see 16 down here, right? That's what we did down here, and we just got a little bit oversold. We got to a 23 and bounced for a little bit before resuming. So I went long a few IWMs at the end of the day. You could see we did try to rally and kind of put in a hammer bar, and it wasn't happening. So we may have to wait for that till tomorrow. But I've seen these things get more oversold. I've seen them go into the single digits, but it's pretty rare, for the RSI to do that. Here was another one. We had nice support, by the way. So this does look different. So I can look at the Qs as well. Qs were holding up fairly better, and they also have, if you go to that 1 hour as well, you've got support down here. So if it does break another level lower, you've got where we've, so again, like I said, they're holding up better out of the three. Still not looking great, but holding up a little bit better than SPY and definitely better than IWM. But support would be 173. Not that far, just about 30 cents to go. Pretty tight in here. So what's the strategy, right, for this? I think instead of, I know some traders who are, mostly on the bullish side, they kind of, they don't like to see the volatility if they're just basically position long. However, I think this is pretty good. I mean, I'm in the camp that, we were getting very, very tight, in terms of this move up. And it kind of seems like it's like a little bit of a self-fulfilling prophecy. Everybody kind of thought that, hey, at some point we're going to see a move down. I mean, we basically went up straight for a couple months. So let it work its way through. Be patient and put together your watch list and try to get into some names, right? I mean, for me, the names that I really concentrated on a lot are the the market leaders that we've seen this year, which is the software space. So, I looked at the Salesforce chart a few times today. I just didn't pull the trigger on it. I just think we may not be done yet. And again, that doesn't mean that the world is going to end. It just means, the market ebbs and it flows. It goes up and it goes down. So it could hold in here, but I want a little bit more verification. And maybe that's a green bar that comes back and takes this out. That's fine if we get that confirmation. If we don't, the reason why I'm a little bit skittish here in starting a position is because we could come down and break this. And I think that would be a better area to really put on a bigger position. Considering you're going to see this in all the software plays, when you have that powerful of a reversal bar like this, it sometimes takes a couple weeks to straighten itself out. So just keep that in mind. We've got the whole year, and I know sometimes if you're trading day to day, as I am, patience is a tough thing, right? You want to be back in there, and it's tough to kind of go for a walk and just let things happen. But hey, we've had a tremendous, first couple months of the year, and I'm up over 30% year to date. The last thing that I want to do is overtrade right now when the market has turned and give back some of those gains. Forget about it. Hold on to it and wait for the market to kind of do this, and then go from there. So that's always, I think, the hardest part for traders who are in front of the screens every day, is to kind of just take a step back, because again, I think if you do that, if we look at some other plays in this group, Workday had all the names I'm going to mention had good numbers. They just maybe got a little bit too far ahead of themselves. And again, this is a big red bar. So usually big red bars, they take some time to kind of get straight. Even though this is holding the 50-day moving average, which I do like. Also, Splunk was a name that had, which we played for earnings, made a little bit of money, got a little bit lucky on this one. But look at Splunk come all the way in. Again, this looks like a big reversal bar. So watch how this behaves on the 50-day moving average. It's been 4 straight days of down days. Maybe wait for that one green bar to kind of give you a little bit of confirmation. Also, Team, which I got really lucky getting out of. That's been the same thing, coming in a little bit. So, give it a little bit of time. Vive, which I mentioned, I got stopped out the other day. That's still on my radar. Again, this one also had good numbers. A couple of names that reported after hours in this space, which I played this one for earnings via call spread. I think it's come in a little bit. Let's see where it is. Yeah. It's up to 39. I think I put on a 37.42 call spread for March. Looks a little bit weak here. GWRE is another name in the space. They're up pretty nicely. So I talked about those, my thoughts on this space in yesterday's video, so I'm not going to rehash that. Let me just talk. I want to talk a little bit about option activity. This LYB, right? So this is so important if you're going to take a shot at what you see on the tape and follow option activity. Now, there was a little bit of calls that went up today, but the guys it's so funny because the guys who originally pointed out the option flow, like me, back on 222, they completely erase the memory of the option activity when a trade doesn't work. But I took this trade. I thought it was compelling back here on 222, which is right here, right? This is where we saw the option activity. A couple times we saw option activity. 222, and then I think there were some March calls. 220 as well, right? So if you took this on 220, or maybe if you did what I did and waited to the second time, This is what happened after the trade. So I'm going to get to the point here in a minute. Let's grab some water. But this is so important. And something that I've learned over time with option activity is sometimes they are not right. And it takes a while, right? So 322, right? And that's the other thing I see people do on Twitter when they talk about option activity. They only tweet about the ones that work. They also don't foot to where the price was when the option activity hit. But I will do that because I'm completely transparent and I'm objective about the order flow that we see on the tape. Sometimes it works, sometimes it doesn't. So this is what you had to do for this trade to work, right? If you got into these calls in here and you got in full size and you didn't add to it, you're basically back to where the price is back to where it was, right? What I did was I did a couple different things. In the first alert that I sent out, I mentioned that I like this, and I thought I was looking for this to kind of get to the 50 to up to the 200-day moving average. Well, that certainly didn't happen. Every day since after they bought calls twice, it's gone down every single day. So look at all these red bars, right? So if you stayed in that, if you did not do any adjustments to your trade, it would not have worked. What I did was I just kind of continuously bought a little bit more. I mean, I think I bought like 3 or 4 contracts the first day, 3 or 4 more, a couple days more, a couple more. I actually went out. The original trade that I went into was April. I think I followed them with the April 95s, but then I also bought a little bit of June. And I just said, hey, this thing, at least if I get a green day, I can kind of get out at my cost basis. But I think from originally buying these around, or maybe I did the April 90s. Let's see. Let's see if I can find my orders from earlier today. I did the Junes. Yeah, I did the April 90 calls. But so today, what caused it to pop? There was a Goldman upgraded it today. But so that's the whole thing with this. Is number one, you have to be, I think, kind of scaling into some. All right, sorry about that. I'm having a little bit of mic issues, so you might hear me go in and out here. But yeah, I mean, that's really, I think, where the management of the trade is so important, because you don't hear the guys talk about that on, the guys who go on TV, on CNBC. They don't talk about any of the ones that don't work. They don't reference a price. So when the stock goes up 6% and they mention it from, let's say that they mentioned it on TV a couple weeks ago, notice it's just basically back to where they started buying. And it's upsetting to me that there's so much deception into trading and to option activity and so forth. But bottom line is the trade worked out for me. I made a little bit of money on it after it was a huge loser. And we'll kind of see. I'm holding the very, very tiny last piece of it. But I think, again, good to kind of go over these things because this is how you learn to trade. If you're going to trade off option activity, and for me, it always has to be something in the technicals, not just option activity. It's got to be something else than just option activity. If not, it just ends up being a day trade for me. But that's a situation there. So yeah, this helped my P&L today out as well. Qualcomm was a name that we saw some repeat activity in it as well. This was a trade where I bought stock and then I actually bought a little bit of options on Monday, and I took off the options today and left the outright stock position. All right, so that's it for today's video. Bottom line is just let this work out. Let this volatility, this little mini bout of volatility, which I think is what it is. I don't like how the news channels like to tie a bow around it and say that it's because of the trade deal and so forth. I just think we've gone up. I mean, you just have to be realistic, right? We've gone up in a straight line. It's not because the trade deal is stalling or it's priced. Maybe it's priced in a little bit, but we've gone up in a straight line. Let's give the market a little bit of a breather, and then let's attack once it kind of settles in a bit. All right. So thanks for watching the video. Have a great night. See you tomorrow.